Hello, my friends. Today is July 26th, and this is Markets Weekly. Now, this past week was a pretty slow week when it came to data, but when it comes to the stock market, it was basically a perfect week. As they say, the S&P 500 made new all-time highs every single day. Now, today, let's talk about two things. First off, let's talk about how it seems like there is some degree of speculative frenzy in the markets where the apes are in full control. So I think it's time to be pretty cautious. And secondly, we also had some new political developments that are showing us the tariff endgame. All right, starting with the apes in control. So looking at the market, I think there are a few signs that there is a high degree of speculation here. First off, of course, you have the rise in these single name stocks that are just getting absolutely squeezed. For example, look at Open. What is Open? Open is one of those online tech real estate companies where basically you can sell your home to Open and they'll have some kind of automated valuation and buy your home from you. These automated home buying strategies have been tried by other companies and have not been successful. And of course, Open really doesn't make money. So Open stock has not been doing well. And yet you see over the past week, you see the stock of Open absolutely surge several 100%. What's happening, of course, is that the apes are getting together, coordinating on social media, buying calls, and making the stock surge. Now, there is some method to this madness, though. It seems like they're looking for stocks that have high short interest. So let's say that you are a more fundamentals-based guy looking at the stock, looking at the business, thinking it's not going to do well and selling it. So what happens? The apes come in, buy a bunch of calls, squeeze the stock higher, forces you to cover, makes the stock go even higher. Honestly, it's good trading if that's your motivation. But of course, a lot of people are just buying it because numbers go up. You see this in many other companies as well. In Kohl's, for example, in Krispy Kreme, basically companies that don't have too much going for them on a fundamental sense, just kind of surge higher because you have a mob of people just buying options. This is something we've seen before, right? GME or Hertz car rental, so forth. So it seems like it's coming back to some extent. Now, in addition to that, you also have a few other signs. For example, the rise of the crypto treasury companies. Now, the person who pioneered the strategy, of course, is Michael Saylor of MicroStrategy, who, to be clear, worked very well, very brilliant. What he would do is he would issue stock and buy Bitcoin. And that made his stock price go to the moon. And now a whole slew of new companies are trying this strategy. What they discovered is, say, if they issued $100 million in stock and used that to buy $100 million in Bitcoin, the market value of their company would actually go up by 200 or 300 million. How does that make sense? Why does buying $1 of Bitcoin actually give you $2 or $3 of value? Well, that's the part where it doesn't make sense. It's kind of a frenzy, but you see companies like this successfully do this strategy, and it makes their stock price go up. Although a lot of times they give part of it back. You even see new companies arrive that are pioneering these crypto strategies, not with Bitcoin, but with more of the alt speculative coins. When asked to comment on this, Michael Saylor actually suggested that, this is kind of risky. So it didn't seem like he was too keen on these new crypto treasury management companies. But yeah, I think that's a pretty strong sign of fervor as well. Traditionally, when you look at excessive speculation in the market, you also look at leverage. Historically, that's through things like margin debt, and there are reports that margin debt is at an all-time high. But really, these days, what people do speculation in is in the options market. And there are charts that show that zero DT options are really becoming increasingly dominant, popular part of the market. And for many stocks, looking at call skew, so how expensive calls are relative to puts, it's also suggesting there's a lot of people who are speculating on further upside. And to be totally clear, this has worked very well for them. We've skyrocketed since the April lows. But it is obviously, in my opinion, some sort of mania / bubble. And how high it can go, I don't know. But eventually, though, I don't know when, eventually these all end in the same way. So I think it's time to be a bit more cautious. Yeah. There are many narratives for what's driving this. Of course, people will talk about AI. People will talk about the vol guys, the smart vol guys will also say that, you just have a lot of vol compression, and VIX has been relatively low as well, and that's supportive of the market. But we'll see what happens. But anyway, I'm seeing tremendous amounts of frenzy in the equity market. So the second thing, though, we have to talk about is in part related to the first, and that is there is some reason for positive sentiment, and that is we're approaching the end of the tariff negotiations. Now, all this began April 1st, April 2nd, on Liberation Day. President Trump unveiled his tariffs, scared the markets. We had a really deep, deep sell-off and have gone straight up since then. Now, the tariff endgame is coming this Friday because that's the deadline that the president has imposed for tariff negotiations. In the past week, we had Japan make a deal, and it looks like this weekend, as the president meets with EU leader Ursula von der Leyen, maybe we'll have an EU deal as well, and that would basically wrap things up. Now, the end game that we're beginning to see is tariffs going to, say, 15%, which is what Japan got as well. Now, 15% obviously is going to be lower than some of the feared numbers, say 20, 25, 30%. For Japan's case, it was definitely lower than 25%. So for them, it's a win. And if you look at the effective tariffs, people calculate the deal that Japan got is a bit lower than what they had been. Although compared to last year, though, it's much higher. Last year, their tariffs was, say, 2 or 3%. Now it looks like on an effective basis, it'd be slightly below 15. So tariffs have gone up a lot, but now we have clarity. We know that this is about what the president expects. The EU deal, whenever they get that, it'll probably be 15% as well. So that's going to be a significant hike from last year. Work from the Yale Budget Office shows that the effective tariff rate is going to be the highest it's been in many decades. Now, if you look at the actual tariff revenue that we're collecting as a proxy as to how effective these are, it's very clear that tariff revenue has surged. And on an annual basis, it looks like we're going to be incrementally increasing this, but say 200 to 300 billion. Again, we don't have the final tariff numbers yet. And earlier in the year, there's a lot of people front-running tariffs by importing a lot of stuff. So there's a lot of cloudiness in this data, but tariff revenue is going to be a lot higher this year than last. And ultimately, that's going to have an economic impact. So we've talked about this many times. It's not straightforward that this would be inflationary. There are three people involved in this. You have the exporter, the importer, and the consumer. And who pays those tariffs? Let's say this extra 200 to 300 billion in tariffs this year is going to vary according to products and bargaining dynamics and so forth. We talked about last week how the tariffs on Japanese cars were basically completely paid by the Japanese auto manufacturers. Year-over-year export auto prices in Japan were down, say 20%, which basically makes up for the 25% tariffs that were imposed on them. But there will also be other products that are different. Now, there are reports that the automakers in the US, GM in particular, are noting that their profits are down a lot because of the tariffs. And so in that case, it's the importing company that's paying the tariffs. So they'll pay it through lower profit margins. And in some cases, of course, the consumers will face higher prices. We have reports saying that Walmart is going to try to pass on price increases to the consumer. And so that's less discretionary income for the consumer to buy other stuff. So yes, at the end of the day, it is a tax increase, not necessarily inflationary, but definitely it's going to have a slowing impact on growth. And so although we have clarity as to what tariffs are going to be, and it's probably going to be less than some people had feared, at the end of the day, it's a lot higher than it was last year, and that's going to have an impact on growth and profit margins. How much, we'll figure out in the coming quarters. Now, in addition to this tariff endgame, we have also something new that President Trump announced, and that is, so part of the Japan deal was an alleged $550 billion investment that Japan is going to make into the US. And President Trump is suggesting that this is going to be an investment that the president will be able to direct at his discretion, and the profits of said investment is going to accrue almost entirely to the United States. in a sense, it's kind of as if he is finally getting financing for the US Sovereign Wealth Fund. So that means that the president could potentially have this huge pool of money that he goes and invests in industries that he thinks are good, and hopefully that's not going to be in industries that are, too related to people he knows. Now, there is some dispute on this. According to the Japanese side, we don't really know about this, and I think we're going to, well, it's not that we don't really know about this, the details are sketchy, nothing is on paper, and we thought that we would, split the profits in a more equitable way. So maybe this is something that's just bluster. In the past, big announcements of investments in the US have turned out to be much smaller than announced. So hard to say how this is. But this does open up an additional wrinkle because at a recent press conference, President Trump also noted that in connection with his ongoing EU negotiations, that the EU would have to, quote unquote, buy it down. That is to say, they would also have to put up money, like Japan, in order to get a 15% tariff rate and a trade deal with the US. So it seems like the end game involves countries not just agreeing to a set of tariffs, but also willing to put up money for investment in the United States. So how this shakes out, we'll find out in the coming days. It looks like we will get an EU deal. It looks like there won't be some kind of brinksmanship until the Friday deadline. There might be in the case of Canada, which the president is saying that it's just not working out there. So that looks like how it's going to shake out. Looks like we're going to have this resolved earlier than expected, and we'll see the economic fallout going forward. Now, the last loose end, of course, is China, and those discussions will be ongoing and drag out. At the end of the day, we need Chinese rare earths. China really likes NVIDIA chips, and so we kind of have trump cards on both sides. And so that discussion is going to be slower and more drawn out. And I think the president is just going to try to work things out slowly by continually extending the deadlines. So that seems like we're at the end of our Liberation Day journey. One more thing that I thought was super interesting was that, so now that we have tariffs, now that we have trade deals, what's next in trying to encourage the rebalancing of global trade? And President Trump kind of alluded to this when asked about what he thought about the continuing weakness of the dollar. Let's listen to what he said.
When we have a strong dollar, one thing happens. It sounds good. But you don't do any tourism. You can't sell tractors. You can't sell trucks. You can't sell anything. It is good for inflation. That's about it. And we have no inflation. We wiped out inflation. But it's an interesting question. So I will never say I like a low currency, but you remember the battles I had with the yuan, with China and with Japan, Japan being the yen. They always wanted a weak currency. They're trying to get a weak currency now. Now, it doesn't sound good, but you make a hell of a lot more money with a weaker dollar. Not a weak dollar, but a weaker dollar than you do with a strong dollar. And the first people that are going to notice it are the manufacturers of trucks and various other things.
So basically, Trump, as we all know, kind of likes a weak dollar. He's going to tell you that he wants a strong dollar, but having a weak dollar is good for making money. And so we've had, as many have noted, one of the weakest starts to the dollar since 1973. And maybe that will continue because that's something that they would like to see. Now, next week is going to be a week full of data. We're going to have GDP, we're going to have jobs, and we're going to have an FOMC meeting. So I'll be back to give my thoughts on the FOMC meeting. So I think I'm going to be joining the foreign guidance people on their live stream. So I'm going to upload what happened there on my channel. So, all right. So I'll talk to you guys on Wednesday.